Thanks very much, Chris, Bill. I'll keep this very short. In fact, it's even shorter than I expected, because I had the pleasure of sitting next to John Brimelow at dinner last night, and after the third glass of Shiraz, he'd completely demolished my argument for why China was going to buy up the whole gold stock from the central banks. And that set me down a bit, but after the fifth glass of Shiraz, I'm sure I heard John Embry mention $3,000 to $5,000 an ounce on the gold price, so that got me back up again. I'm just going to talk very briefly on three items: gold, Wits Gold, and Garter. On gold, very quickly on mine supply, global production fell 5% last year, and I think that's the biggest year-on-year fall since 1943. Exploration has collapsed. And to give you an example of what a company like Newmont has to do every year just to keep its reserves static, it has to find 7 million new ounces. And mines or deposits of that size are extremely difficult to come across. So I say to you that even if gold hits John's target tomorrow, it's not going to make the slightest difference in the production of gold from underground for, say, the next 5 years. The fact of the matter is, it takes 10 years from discovering a deposit to producing it, and so I think we're going to have falling supply, come what may, for the next 5 years at least. On other parts of supply, hedging is a dirty word. I don't think you'll find any major gold mining companies talking about it now, and it'll be interesting to see how Barrick manages to extract itself. I noticed from Reg's slide up there that in the old days, Barrick used to be way ahead as the biggest gold mining company in the world, and Newmont has now certainly stolen its lights. And on the central banks, well, we all talk about central banks, but frankly, at the end of the day, they're very good at keeping their information private. Most of the yak comes from the Western central banks, who, net of liabilities, probably actually don't own any money. And very little comes from the East, who actually, at the end of the day, are the guys who not only have the money, but have a tiny proportion of their assets invested in gold as a percentage of their reserves. Sooner or later, one of those Eastern central banks is going to break ranks and start to buy. So I say to you that the balance is increasingly on a reduction in supply, and when we come to demand, I think that whether you talk about Chinese, Indian, Middle East, whatever, another important factor to make out is that these guys wouldn't know an ETF if it hit them in the face. They are not believers in paper gold. They are believers in real gold, and that means gold in the safe with a key to the safe in their pocket. So I say watch this space for physical demand. The other point I'd like to make is that we get down into the detail, and we, rather like the mining industry, you can only see really very close in front of you, and sometimes it's worth standing back. And there's a law of big numbers here, and that is that if you take world money, or you take just world market cap of equities and bonds, and however you stack it up, you're talking about $100 trillion. I mean, let's take a round figure, 200, 300, who knows? But let's take $100 trillion. Well, all the gold that's ever been mined is what, 1.5% of that, 1.5 trillion? Most of that will never see the light of day again, and the so-called central bank holdings of supposedly about 30% of that, some of that may be going to see the light, maybe some of that, as we hear, has been sold already. The point I want to make is that gold, and particularly the gold that is owned by central banks, is frankly, in the world of investment, a rounding error. It's insignificant. We mustn't stand there enthralled to these people. The fact of the matter is that when people in the investment community decide, and whatever it takes to get them to decide, I don't know, but when they do, the central banks will be taken out in the flick of an eyelid. And I just believe that we mustn't get too defensive about this. In 1980, 5% of investment monies worldwide was in gold and gold shares. It would take just a tenth of that percentage to take central banks completely out of their gold. So all I'm saying is I think the central banks are irrelevant and we must all be strong here. Moving on to Wits Gold, South Africa's had a bad rap recently. It's had a strike, or it's on strike. Well, frankly, every 2 years, the unions used to threaten a strike, and now and then it would happen. But they usually last for a very small period of time. Right now, the strike is clearly a posturing effort by the unions to try and persuade the government to get the rand weaker. Real interest rates are extraordinarily high in South Africa, so interest rates are likely to fall. And, you know, South Africa can't win. When the currency was collapsing 2 years ago, everyone said, oh, the place, well, what do you expect? It's going to hell in a handbasket. Now the currency has been one of the strongest in the world for the last year. And everyone's saying, Christ, you know, the whole gold mining industry is going out of business. The fact of the matter is, and this is really the key point here, in the time I've lived there, which is the last 12 years, I've seen a transition from white to black government. To be frank, the government of South Africa that we've currently got is the best we've had in 40 years. The finances have never been so conservatively managed. The roads have never been so full of new cars being driven by black, middle-class, empowered citizens. The country is on a huge roll, and I'm very, very bullish about it. And although it's a long way away, and it always reads badly in the newspapers, as someone said, it's where the gold is. And that's the other point I want to make. We forget that every third gold coin or piece of gold bullion that's ever been made or ever come out of the ground has come out of the ground from South Africa. It is the mother of all gold systems. And according to the US Geological Survey, 50% of the remaining reserves of gold in the world exist in the Witwatersrand. So I say to you that what Saudi Arabia is to oil, South Africa is to gold. And no one in the mining industry, or indeed in the investment industry, I believe, looking to the future, can ignore this place. Okay, so Wits Gold. There's been, I think, a once-in-a-lifetime opportunity, and we've been lucky to perhaps take advantage of it. The government has said, right, whatever's been in the past is going to change, and in future, like any other country in the world, gold is going to be owned by the government, and then you can apply for the rights that you had in the past. But one thing you have to do is to ensure that over the next 10 years, 25% of your gold is owned by previously disadvantaged individuals. We've taken an empowerment grouping. They own 40% of the company. It's a broad-spread empowerment grouping. We've acquired the exploration rights from the 3 best underground miners in the world. That's Anglo Gold, Gold Fields, and Harmony. And, okay, why did they sell this to us? For 2 reasons. One is they've got 50 years' worth of reserves within their existing lease areas. And secondly, they get credits from the government for doing this empowerment work. And we were the best people to come along at the time. What have we got? 2 pieces of land, one in the Southern Free State, adjacent to Beatrix, which produces 650,000 ounces of gold a year, and the whole of another area called the Potch Gap, which has never been under single ownership ever, previously owned by Anglo Gold and Gold Fields, who never shared any information with each other. We've acquired these 2 specific areas, and we believe that we have in these areas 150 million ounces of gold. How do we know that there's that amount of gold there? Well, the previous owners spent over $100 million in today's money on this area. They sunk 160 boreholes, each over a mile in depth. And we believe that as a result, we have the 5th biggest gold resource in the world. Okay, it's deep, but it starts to come into the money just slightly ahead of where we are today, probably in the $450 an ounce area. Probably half of that gold will come into the money before gold gets to 700. And we believe in a world that is increasingly short of gold, and if we take John's view of gold, which I share, we think that this company one day in the future could be one of the biggest gold mining groups in the world. Our industry is full of exaggeration, but I believe that that is not completely Cracker's assumption. Our plan is to list in the first quarter of 2006 to raise a tiny amount of money. We don't need very much money, and our belief is to sell a little very cheap. And what we want to do is we want to gain friends who are going to be with us in the long run. And that means not grand institutions. It means private individuals who believe, like we do, in the future of gold. So that is why we're proud that Garter is not a substantial but a small shareholder in our company, and we hope that over the next 4 to 5 months that we will be able to bring in what we believe is the most loyal and believing and understanding group of gold shareholders in the world, which is the North American gold bull. We're also going to have an Amex listing, which will follow on from the Johannesburg listing. We will list this at somewhere between 50 and 75 cents a resource ounce. Now that compares with Harmony and Durban Depot trading at between $4 and $6 a resource ounce. We believe that this will be one of the cheapest ways to own gold in the world, and also one of the most highly geared options on the gold price. Finally, Garter. I think it's worth making the point that that without these guys, we wouldn't be here in this historic venue, having a tremendous amount of fun and nursing a slight hangover from last night. I think it's just been a brilliant idea. Whoever had it should be made given the freedom of the city. And you know, I'm sure we've all got our views of Garter. Some call them the lunatic fringe of the investing world or the gold world. When I was chairman of Harmony, I had to bite my tongue in case I mentioned the word Garter, because I knew I'd be laughed out of the boardroom. But the fact of the matter is that when you're trading at a secular low in any market, you need a few lunatics like us to gather momentum and to get the message across. I remember when gold was $250 in 1998. To be frank, one of the only things that kept one going in the morning were those fantastic emails from Chris and from Bill and his team, which kept our spirits up. I think it was their enthusiasm and grit that kept us all going, and it was their detective work and their determination to get the truth out that, frankly, has given us, both as miners and investors, the courage to continue to dig up the gold and to invest in it. I think we owe them all a huge vote of thanks. I think they will have and we will all have our day in the sun. And I truly believe that it's not very far away from now. So please, can we all just rise now and to give the guys a warm round of applause. Thank you very much.